deposit remains open laterally in most directions, as well as at depth. We have a target of getting to 5 million ounces. To be quite honest, personally, I think the potential is significantly higher than that. We have infrastructure, we have a fully owned and permitted mill, we have mine permits, we have grid power, we have water, we have 17 portals, 25 kilometers of underground workings, we have tailings facilities, we have 160 kilometers of access roads. And at the end of the day, we gotta drill, baby, drill.
Good morning, good afternoon, or good evening, depending on where in the world you're signing in from today. I've got with me today Marco Roque, CEO of Cassiar Gold, to discuss recent drill results the company announced this week. Marco, how are you?
I've been better, under a bit of a flu this week, but, I got some respite from releasing some nice drill results.
There you go. We'll be the sick kids club today, but nice drill results usually help, I think, better than Advil, so there you go. So here's how today's going to work, just for the folks in the room. I've got some questions I'm going to run through about those drill results, but today is an interactive event, so please do use the chat button at the bottom right of your screen to ask questions at any point during today's event. We'll try to get to as many as we can today. If there's any I don't get to for whatever reason, I will make sure the Cassiar team still gets them, and they'll be able to get back to you using the email or phone number that you entered on registration. The only other piece of housekeeping today that I'll say is today's event is being recorded, and the replay will be available probably midday Eastern time. So it'll pop right into your inbox. It'll also be at this same link and on Six's YouTube channel. But that's all the housekeeping out of the way, so I want to get right into the good stuff of today's interview. So Marco, the release mentions that 91% of the ounces at Taurus occur within 150 meters of surface. With these new high-grade intercepts extending that deposit footprint, how are you thinking about the expansion potential at Taurus, and what areas do you see as kind of most promising for future growth?
It's I'm not sure if necessarily the high grade intercepts really change much about what we see as the overall potential at Taurus. Taurus is very, very shallow. 91% of the ounces are within 150 meters from surface. On average, or about there's 10 meters of soil overburden on top of the deposit, and in some parts with outcrops. And what we see, outside of the resource, the deposit that we've updated, earlier this year, we see both, very large geophysical anomalies, as well as, outcrop at surface from mapping and sampling, as well as wherever we, pretty much almost everywhere we've done drilling, we intercepted mineralization. More importantly, centered around Taurus, or on the immediate margins of Taurus, the deposit remains open laterally in most directions, as well as at depth. So we have a target of getting to 5 million ounces. To be quite honest, personally, I think the potential is significantly higher than that. But yeah, I think that's kind of a realistic medium-term goal that we can achieve, given the resources and the speed at which we've been advancing this project. So obviously we want to continue to grow the deposit laterally, potentially connect the different pits that we have. We have some small pits, and eventually get to the new coast target, where we actually did most of the drilling this year, and where we see a lot of potential as well.
Hey, awesome. Now that I got a lot of emails in advance of this webinar about drill hole 25TA245. So hopefully the question I'm about to ask will cover most of those, but if it doesn't, let me know in the chat and I'll try to give you some more details. But obviously that hole returns some exceptional grades, including that 369 grams per ton gold over 0.4 meters. Can you walk us through just what these high grade, sexy, visible gold intercepts tell you about the geology at Taurus, and how you're planning to target similar structures going forward?
Yeah, it's that's a great question. It's first of all, 369 grams per ton of gold is really not what you can expect going forward. We look at this deposit as a gram to a gram and a half over significant tonnage, millions of tons of rock. But of course, we know that in terms of the geology, we have kind of two main kind of styles of mineralization associated with the gold. We have the gold with the quartz veins, and in the bulk tonnage area of our deposits, these are very, very thin. They're in the centimeter scale, but they can carry, every once in a while, some nice high-grade intercepts, especially along some trends, and also gold associated with the pyrites, with these coalescing envelopes. So, I would say, you can't expect to find these kind of like 300 gram per ton plus intercepts all the time. But having said that, and this is actually something that became, where in a qualitative approach to our most recent 431 compliant resource estimate that we've put out, we were able to really, define much better geological models and structural controls for this, like, higher grade domains that we basically targeted, and we were able to extend it. And this results confirms our thinking and also allows us to, for the future, potentially continue to target these, higher grade, domains. Although, most of the ounces will be at the more typical, this is what we expect. You never know the future,
Sure.
More typical to the, gram to a gram and a half grade that we have in the overall deposit.
Yeah, makes sense. I know your results pending from 11 drill holes at New Coast Prospect, which is, I think, 2 kilometers south of Taurus. I'm just curious, looking to kind of get in your headspace here. What prompted you to allocate, over 70% of this year's drilling meters to New Coast, and what's the strategic thinking behind exploring that regional target specifically?
Yeah, that's a great question. So, at Taurus, at the Taurus deposits, on just over 1 square kilometer footprint, we already have defined 1.9 million ounces inferred at 0.95 grams per ton, with an additional 410,000 ounces indicated at 1.43 grams per ton of gold. So you can add those two, resource categories, and you already have a very substantial deposit right there. The deposit remains open. We don't know how big that deposit's going to get. We know it's open laterally in most directions and at depth. But in the last two previous seasons, we have allocated 9 drill holes into the New Coast target. And all of those 9 drill holes were mineralized. They're quite a between 100 to a couple hundred meters in some cases. So they're kind of really spread apart. But what we realized there at New Coast is that New Coast, has the potential to become another Taurus. And in fact, and I mentioned this before in a couple of interviews, the old name for New Coast was actually Taurus 2. So, our thinking here is, we clearly have, a pretty exciting deposit that already has the scale that you want to see at Taurus. And the New Coast target is roughly 2 kilometers south of Taurus. And our goal here is to be able to demonstrate, at least kind of put a sort of wireframe into basically an area where we can feel confident that we can, really see and believe that we have potentially another Taurus there. And that's the reason, why we've allocated, so much drilling for that target this year, because that can really demonstrate unequivocally that New Coast could be effectively Taurus 2.
Okay, I know, appreciate that. With 8.8 million tons indicated at 1.43 grams per ton gold at Taurus, and the deposit remaining open for expansion, what are the kind of next milestones that you need to achieve to move this project towards development?
Well, by the way, we don't have just 8.8 million tons at 1.43 grams per ton for 410,000 ounces. We also have 63 million tons at 0.95 grams per ton inferred for 1.9 additional million ounces. So it's it's already a very substantial resource size. What are the key steps for to take the project forward to a development decision? Now, internally, what we were thinking is, it's kind of a three parallel activities as we advance this project. We want to get to a development decision in 5 years for this part of the property. And over the next few years, we want to, the 3 tracks is continue to expand mineralization, not only to grow the resource size, but also do infill drilling to get it to higher categories as well, while at the same time, taking the project through, economic engineering studies as well. We have we plan to have our maiden PEA coming out in the first half of next year on the back of met studies that we're looking to release as well in the first half of next year. And the third kind of track that we're looking to progress in the meantime is also the re-permitting environmental and social work that's required to get this into production. We already have 2 mine permits in place. We have infrastructure, power, mill, etc. But we will still probably will be looking at a 2-3 year re-permitting process, which in a grand scheme of things and the overall global mining environment is actually a very, very short timeline as well. So it's kind of the 3 tracks that we want to advance over the next kind of 4 to 5 years to get to a mine development decision.
Great, no, appreciate it. I want to touch on Cassiar South really just specifically, because I know the release mentioned that Cassiar South has historical underground mines that produced over 315,000 ounces at 10 to 20 grams per ton gold grades. How does the exploration strategy differ for you guys between developing the bulk tonnage, we'll call it, Taurus Deposit, versus exploring for the high-grade veins at Cassiar South?
That's a great question. In the last 5 years, we've allocated 75% of our budgets to the bulk tonnage and around 25% of our budgets to the high grade. To be quite honest, and given the nature of our deposit on the bulk tonnage at the Taurus deposits, we're hitting mineralization typically from surface. So every meter of drilling there typically counts towards basically adding ounces. And that's why when you look at the amount of drilling that we've done, we were able to increase our resource so effectively with relatively limited amount of drilling compared to some of our peers. And this is a function of the nature of mineralization that typically starts at surface. And at the high grade veins in the south, the mineralization style, it's a little bit different. So in the south, basically what you have is on average the veins are 3 meters wide, although they pinch and swell. And on average, the grades of the veins are between 10 and 20 grams per ton, as you can see by the historical grades and recoveries as well. But what you have there is the entirety of the grade is basically just concentrated, typically on those on average 3 meter wide veins, and outside of it, there's really not much. So what happens is when we try to drill for these vein structures, you end up spending a lot of meters just to get to your targets. And sometimes you might miss the vein, or sometimes the vein pinches and swells, or you also have a bit of a negative effect. So in practice, what that results in is that you end up adding less ounces per meter drilled on the high grade than what the ounces you get from the bulk tonnage. Now, it's interesting because I know that a lot of investors in the mining and gold junior space are very, very enamored with grade.
Sure.
But grade has its benefits, but also its downside. So that's the reason we've been focusing on the bulk tonnage. We can add more ounces, and we're building something much bigger, much faster. Having said that, the high grade veins is something we're quite excited about because we have infrastructure, we have a fully owned and permitted mill, we have mine permits, we have grid power, we have water, we have 17 portals, 25 kilometers of underground workings, we have tailings facilities, we have 160 kilometers of access roads. And that puts us in a very unique position for a potential, much nearer term bootstrap for this project focus on the high-grade veins as opposed to on the bulk tonnage. So that could provide an optionality to basically go into production sooner than what we are envisaging for the Taurus deposit or the bulk tonnage side of our project. And obviously that's attractive in and on itself because, you know, it has a potential to get us in cash flow much sooner. And you know, it's basically balancing, you know, the risks and benefits of you know, both sides of the property. Of course, you have some benefits, but also some downsides depending on what strategy you want to pursue. But you know, not wanting to make this conversation too long because it's you know, it's a conversation that comes along quite often. It's you know, it's what I would call a Hollywood problem. So
Yeah, no, love a champagne problem for sure. Those are the better ones to have if you can get them. And I know we kind of just discussed this in the last question, but just to kind of summarize, based on what you learned from the 2025 program, how's Cassiar thinking about the 2026 exploration season? Are you going to continue focusing on near surface expansion, or are there other priorities emerging? Just in simple terms for the investors in the room, kind of what have you learned? What comes next?
yeah, I mean, like part of the answer is also related to what I just commented to the high grade. So I guess, you know, we will have to see. I mean, you know, the results on this release from Taurus are you know, quite exciting. And again, it goes back to the Hollywood problem as well. You know, we have more targets than we can, you know, chew for the near term. But also, like, we need to really, you know, we still have, you know, over 70% of our drill meters from this season yet to be released. All of them coming from the new coast targets. So I guess we'll need to see the results from that. I guess we need to see, you know, how our geological models get updated with the new drilling at Taurus. We're also, you know, basically building new models for the Cassiar South and the potential extensions of the high-grade vein, especially with new geophysical surveys that we conducted late last year on the Cassiar South part of our property that provided, you know, some very exciting anomalies as well. So we gotta put, you know, all of these opportunities on a scale, you know, and also, you know, in tandem, also put in balance the development scenarios and see, you know, what can generate the fastest return to our shareholders with the least amount of risk. And again, you know, Hollywood, champagne problems, whatever you want to call it. We don't have any shortage of targets. There's a lot of ways we can develop this. And, you know, it's good problems to have, as I say.
Sure, no, makes sense. Now I know Joe Maxwell mentioned continuing to identify new trends and advance higher grade domains along strike and down dip. What have you learned about the structural controls on mineralization that kind of give you and the team confidence in the systematic expansion potential?
Yeah. No, this goes back to kind of a similar comment I made earlier on one of the questions is, you know, if you look at our new mineral resource estimate for 211 compliant resource, we have, you know, much better handle and much better geological models, better defined domains, and you know, basically testing, you know, some of these targets, you know, resulted in very good results. So, you know, that increases the confidence on you know, the potential to basically continue to extend these, you know, structurally controlled, you know, higher grade domains. But again, we're not here just to define, you know, higher grade tiny domains. You know, we're looking for tonnage. You know, we're looking for size. We're looking for 5 million ounces plus, and I mean, we'll continue to grow this. You know, in some parts of the property, if we're very you know, confident about some, you know, particular structurally controlled you know, domains that we can continue to extend, we can do that. But you know, at the end of the day, the project is you know, is really severely underexplored, undervalued, but also underexplored.
Sure.
You know, the footprint of the Taurus deposit is just over 1 square kilometer, and our land package is 590 square kilometers. So we have a lot of room to grow, and at the end of the day, we gotta drill, baby, drill.
Sorry, I think I lost your internet there for a second, but I think we're back. Now, one thing I know, you mentioned this is an important region in British Columbia. Just for the investors in the room who are new to the Cassiar story, I know there's a number of them just based on the data I'm looking at. Can you elaborate on what makes the region you operate in attractive from an infrastructure, permitting, and operational standpoint, just compared to other gold districts?
Yeah, I mean, there's so many things that makes I mean, this is a gold rush area. In the late 1800s, a 72-ounce solid gold nugget was found right at the heart of our property. So that was kickstarted the gold rush in our districts. There's 5 best producing mines. Um, you know, there's been a lot of like mining developing in our region. It's a mining region. There's a lot of infrastructure already in place. We have Provincial Highway 37. We have the Cassiar paved road going straight to the Taurus deposits. We have mine permits already in place. We have grid power. We have water. We have pretty nice sized camp. We have portals, tailings facilities, a fully owned and permitted mill. This is a very significant infrastructure that, well, first and foremost, it really highlights how undervalued we are.
Sure.
Forget about the gold. Just look at our infrastructure, and then you add on top of that all the resource that we have. But also, more importantly, it really makes it, all of these advantages make, really, add 2 benefits to the company. One, it really allows us to operate extremely efficiently. And the second is it really significantly lowers the barrier for development as well, because the infrastructure, a lot of the infrastructure is already in place where, naturally most new and exciting deposits are being found in the middle of nowhere, which is natural. But we're blessed to be finding or defining very, very sizable districts in an area that already benefits from all of this infrastructure and permitting and operational advantages as well.
Okay, great. Another kind of big picture question before I get to some of the stuff that was sent in over email, but for investors trying to understand Cassiar's opportunity, what would you characterize as the real differentiating factor of the project? Is it that near surface nature of the resource, expansion potential, high grade domains, or is it kind of all of the above or something I didn't catch?
I mean, definitely all of the above. I think I would maybe like the 5 things I really like to highlight as our key differentiator or competitive advantages are: 1, we have a team that has a track record of discovering, permitting, building, operating, selling billion-dollar gold projects, not only in Canada but around the world. We have the second thing is the infrastructure that we just mentioned: the paved roads, the power, the water, the mill, all the other infrastructure I already mentioned a couple of times in this webinar as well. The third thing is the resource, which at the end of the day is the most important, to be honest with you. There's no point having all the infrastructure if we don't have gold to mine. So we already have a very substantial resource, but again, we've barely scratched the surface on this district. There's a lot of room to grow laterally. There's a lot of room to grow at depth, and we're just in the early innings of trying to understand how big this district really is. The fourth thing, and it's only 5, so bear with me. The fourth thing is really the fact that we are in a safe jurisdiction, and we have mine permits and community support. I can't emphasize this enough. The world has become very small for mining companies. It's a really tough world out there. Some companies struggle to, you go to South Africa, some companies struggle to access power because they have rolling blackouts, or you go to Mali and the project and the government is taking over your project or taking some of your employees hostage, or you're in Russia and you're forced to fire sale your assets because of the geopolitical problems that you have around the world, or you have changing geopolitical landscape like in Latin America. So that's really the fourth. But the fifth one, which is I would say also for me one of the most, if not the most important, is really the valuation. We're trading below $15 Canadian enterprise value per ounce on the ground. We're one of the cheapest ounces on the ground. With all of these benefits that actually should put us at a premium. You compare like our valuation to peers like look at Artemis that just went into production earlier this year, or look at Thesis, or look at Sitka or White Gold or Skeena Resources, and you can see that like our potential for re-rate is enormous as we progress this and eventually get to a mining decision. So you'll be very hard pressed to find anything cheaper and with a better risk reward than what Cassiar Gold offers right now.
Awesome. So that's the end of my questions, and I think it covered a lot of the ones that came in advance over email. There was one before I get into the stuff that's in the chat, which I appreciate your patience, guys, in the chat. One that came over email is just if you could speak to the tech team that actually performs the drilling. Have you worked with them in the past, and are you happy with their performance this last season?
I mean, I don't know which one you're mentioning to. So we have like, our geological team, our technical team, which are all in-house geologists. And I'm very, very pleased with their work. They've been delivering, year after year, and they're really the brains behind the operation. As we unlock the treasure that we have here at the Cassiar Gold project. If you're asking about the drill company, so our drill company we've used in the last 3 years is Hard Rock Drilling. They're actually, very, very competent, quite efficient as well. We've been drilling at just under $190 per meter drilled, which I like. Canadian, by the way, which it's a testament to their efficiency, but also to the infrastructure and access that and the efficiencies that our project provides. We're always open to any new contractors. If you can provide a better service at a better price, we're always happy to consider anyone.
Perfect, thank you. Going into some of the stuff in the chat, Baron asks. First, he says, well done on the drill hole expanding Taurus, and he's looking forward to the rest of drills in the PA. But he wants to know, how are we going to prove the stacked veins thesis?
Stacked veins. I mean, we know we have stacked vein systems throughout the project. It's important to differentiate the two different styles of mineralization that we have in a Cassiar North part of the project and Cassiar South. Cassiar North, we see, for the most part, very narrow veins that are typically in a centimeter scale, the thickness of those veins. In the south, they're on average 3 meters wide, so they're nice thickness, those 3 meter veins. So, I mean, in the north, I think it's less relevant, proving that, stacking of veins, or we see we have this concept of stacking of mineralization, and I guess the way to demonstrate that is to deep drilling. Interestingly enough, we completed a 720-meter long drill hole at the New Coast target, for which we don't have the assays, of course, they're coming soon, but we have released the core photos of that in September. So I'll encourage everyone to go and check the core photos, which basically pretty much looks like the type of drill core we see at Taurus and the bulk tonnage style mineralization of our targets. And I mean, it's nice to prove that stacking, although it's a bit of a conundrum as well. We have so much potential at depth. These orogenic gold deposits can go up to 2-3 kilometers.
Sure.
And to be honest, I'm not terribly excited to do a 3-kilometer deep drill hole. That sounds like a very expensive enterprise, but and also at the end of the day, we have so much room to grow laterally, and we have so much gold at surface that it's much easier just to expand close to surface, which is also theoretically much more economical than just trying to go deep. just to prove, a geological point, as opposed to focusing on the ounces that are, technically or theoretically much more feasible or economical, which are the ones that are closest to surface and could be put into a pit. And to that stacking concept as well is, it's not so much about the veins on the bulk tonnage. The veins, they provide a kicker.
Sure.
They add some high grade ounces, but at the end of the day, like, we're gonna put everything through the mill. So, when you go through the higher grade vein domains, you're gonna get some, more ounces and better return. But like we're gonna process everything. It's more, it's more important to like maybe like on the southern part of the property where, like, the tagging those high grade underground discrete veins, which are very juicy, where they might be, but also, the challenge there is, it's 3 meter wide veins, 200 or 300 meters deep or 500 meters deep. Can be a little bit time consuming and frustrating to find them, but also, there's big upside to find those, to tag those veins and then to define them to eventually, mine them. But we'll just continue to go from what we know. We have known mineralization at Taurus and at New Coast. And from there we're expanding, the resource at Taurus, and eventually we want to be able to put a resource at New Coast. Eventually, we want to be able to put a resource in the Cassiar South high-grade veins and continue to work from what we know and continue to expand mineralization in a very systematic approach.
Okay, no, appreciate that very much. One question I got here is, do you have any plans and options to get the tailings processed as a standalone JV project to raise some drilling cash?
Yeah, I get the question, like, relatively regularly. Like we've in discussions with a couple of groups to process. I can't remember exactly. I think we have around 35 to 40,000 ounces in the tailings. Tailings are running around a gram to a gram and a quarter. It's a decent amount of gold at current gold prices. That's what, 150 to 100 million. But one aspect is it could be a bit of a distraction, and also the other aspect is 1 gram to a gram and a quarter. If you need to truck that for a few hundred kilometers, it can get quite expensive as well. So like it's something we're definitely considering, and if we have a good deal to monetize that and create more space in our tailings facilities while at the same time we can get paid, we'll definitely take that.
Great, no, appreciate that. One question, somebody notes that despite great story and improving results, there's still a large selling volume. They're curious where it's coming from, whether it's from a individual institution or if you know really where that big selling volume comes from.
Well, I have no idea who's selling. It's a great question. All the institutions I speak with, they guarantee me that they're not selling a share. But we've had big volume, big turnover in the last 6 months. I think we traded like almost 100 million shares. We have 147 million shares outstanding. So I would say there's a good chance we have basically an entirely new shareholder base. And it's interesting because all the new shareholders that I've met this year and that are have been accumulating significant positions of millions of shares each. Almost all of them see this as a 10-bagger. And when you look at our peers, it's hard not to see it that way. So in a way, I think what has happened is, following like the kind of the bear market 2022 to 2020, end of 2024, which was kind of really tough for the junior gold space and very tough for Cassiar Gold, share price. I think there's maybe some shareholder fatigue. A lot of people, I think, threw the towel way too soon, and I feel sorry for them. I've been accumulating shares over the years through not so good times and some really bad times. because you can whine about the share price because it doesn't represent the value of the company, or you can see it as an opportunity and buy something that is a lot more valuable for basically at a fire sale price, and that's what I've been doing. And I think a lot of these shareholders that have been coming in over this calendar year see the opportunity, understand what we're building, and they're not here for to double or triple their money. They're looking to get a much bigger return.
That's what Junior Space is all about. So appreciate that. Question from Bjorn in the chat. He asks, is it possible to do a 10K ton bulk sample from high grade, and how much free cash flow could come out of that?
10K what? 10,000 tons?
I believe so. Yeah.
Yeah. I mean, we have. I mean, why go for that? Why don't we even go for 300 tons per day, get fired up the mill and start production? Why go for 10,000 tons only? That would be my reply. And I guess the counter answer to that is like we need a proper mining plan. We do also have some high grade hits at surface. I mean, like just this press release that came out, 13 meters at 13 grams from 28 meters downhole. I mean, it's not at surface, but it's pretty close to surface.
Close. Sure.
We also have an intercept from a couple of years ago, just a few hundred meters north of this at the Taurus East area, where we hit 6.6 meters at I think 22 grams per ton from 4 meters downhole. So we have some high grade mineralization in every once in a while on the bulk tonnage area. Again, this is not representative of the overall grade of the resource, but some just higher grade domains that we have within the overall deposit. But I think it's much more efficient to, instead of like just chasing some shining object that could give you like a few $1 million or $10 million, is actually really doing a proper plan and really properly assess the possibility of bootstrapping this into production. If you look at 10 to 20 grams per ton, which is kind of the grades that we see at the Cassiar South, for example, historical grades and recoveries, that's basically 35 to 70,000 ounces per year, which at current gold prices is a lot more attractive. We have a full young and permanent mill that is in good condition, and we have mine permits for that level of tonnage as well. So as opposed to try to do a bulk sample and ship ore and lose a lot of value and only recover so much value out of the gold by letting whatever off-taker take most of the value, we could actually maybe wait a little bit longer and do it properly ourselves.
Great. One last question I got from the chat. I know we're already a bit over the time I said we'd be today. Steve asks, do we have timing for the PEA?
Yeah, it's the first half of next year.
First half of next year. Easy answer. Marco, thanks so much. I know you're coming off a flu, so particularly appreciate you giving some extra context to yesterday's press release. Everybody who joined, thank you so much for being with us today. Really appreciate your time. And if you have additional questions, you think of the perfect one to ask right after the webinar ends, as I usually do, please do still send it in. I'll make sure the Cassiar Gold team gets it. But Marco, thanks so much. Hope you have a great end of your day.
Thank you.